Hey folks, this is Rainer here from Trading with Rainer. So welcome to my weekly analysis for the 26th of May 2013. Today I'll be covering quite a number of pairs, so hope you guys would find this information useful. So let's get the ball rolling. The first pair I'll be looking at will be the most popular dollar yen. So looking at the weekly chart, what we see, the latest candlestick pattern is actually, I would say, a bearish engulfing pattern, but still it's not enough to warrant a change in trend. Possible upcoming correction, because we do get some bearish patterns along the way in time. So this is happened to be one of it. And looking down to the daily chart, we can actually see a pattern that is recurring. So let me highlight to you the pattern if you guys have not catch it yet. So previous support, alright? Sorry, previous resistance, right? Price broke out of it, came back down and test, formed what you call a bear trap, because people who went short here got stopped out by this bullish candle, alright? So price formed up to make a new high, previous resistance, price broke out, came back and tested again as support, alright? Price retest the resistance, came back down and test the support, and now price finally broke out to new highs and is coming back down again. So where will it test? Previous support, right? That's a level that I'll be anticipating, and take note that it coincides with the key 100 level. So for those of you who wants to go long this 100 level, please do pay attention, right? Aggressive traders who just place a buy limit at this level, and logically your stop's going to be below this swing low down here, right? But you may not want to do that because your stop's actually so large, about, I would say, 400-500 pips. So what you can do is actually wait for a reversal pattern, a bullish reversal pattern, before going long, right? So the next question is, where do you want to take profits? So looking at the FIB tool, right, I use the FIB extension. You can see that price usually before reaching the 162, it will usually bounce off. So taking profit at 127 will be a reasonable target, right? Say I'll look at the next swing up here again, right? So again, didn't reach the 162 but did touch the 127, right? So if now you're anticipating this swing, alright, so targets could be looking at 127, which is around the 105 500 level. Yeah, that would be a reasonable target. And yep, but before you go long, you may want to look for a bullish price action on the daily chart or even the 4-hour chart. Naturally on the 4-hour chart you get a tighter stop loss, alright? However, the signal may not be as powerful or strong compared to the daily chart, right? So that's the pros and cons, right? But nonetheless, if the 4-hour chart form a very bullish price action trigger, I don't see a reason why not to go long. And possible profit targets will be looking at the 105 500. So that's my dollar yen. Now we look at the euro dollar. The weekly chart again, price is still contained between the range of the 132 and the 1275. So drilling down to the 4-hour chart, we can see that price form a bearish engulfing pattern, right, recently here, right? But then I hope you guys didn't went short on it, because your stops will be above the week high and you have some trouble area at this level. So if you look at profit targets, it's definitely not even 1-to-1. So I didn't take that trade. However, price did came back to test this level here and it formed a bearish engulfing pattern. I also didn't take this trade. Reason being was on a Friday, and I didn't like the wick at the bottom, signaling some buying pressure, So I skipped the trade altogether. So for those of you who are already in the trade, I hope your stops will actually be above this week high here, and tighten up your stops as price come down to this support level, right? Because you never know if price will just come down and bounce back up and break out to the upside. So you definitely want to tighten up as it comes towards this support level, right? That's it for my euro dollar. Now let's look at the British pound dollar. On the weekly chart, we can see that price forms some sort of a bearish pattern, but both sellers and buyers are pretty equal on both sides, with more I would say more force from the sellers. Alright, you can see how price closed lower for the week. So looking at the forward chart, for those of you who are looking to go short, these two levels I think you should pay attention to, namely the 151.60 level here and the 52.80 level, which is here. So if price does form a bearish reversal pattern here, you can go short. But if price does break out the level and head towards this level here, you may look for shorts at this level as well. So that's for my British pound dollar. So now let's look at the commodity currency, which is the Aussie dollar. This is a weekly chart, and we can see how the 96 level play a very important support level. Okay, you can just highlight the number of times it has tested the level. Right here, 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 and finally we're here again. So it's actually not a hard concrete level, right? But rather I would say it's a zone, right? Between the 96 till the 94, about the 200 pip zone. If price were to actually break down of this zone, right? The next level of support that will actually comes in is actually here, or even up to the 80 level. So this zone is actually a very critical zone if you ask me. Price may whipsaw around this zone here, before finally rallying back upwards. I don't really anticipate a break below the support level because I don't think fundamentals are actually bad enough to warrant a break below this support zone. So what I anticipate is a consolidation at this level here, alright, for the institutional to slowly accumulate at these levels, and finally taking price up to back where it was high before, which is around the 1055 level. So I do expect some consolidation in the coming weeks before price heading up higher for this pair. Alright, so the next pair I look at will be the Euro Aussie dollar. Notice I said last week how this 131 level is a very significant level, and what happened this week? Well, price broke and closed above that level strongly. So now, from a bearish bias, I have a bullish one. So how am I going to go long? Looking at the forward chart, the next significant level will actually be here, this 132.44 or the 131 level. So again, I'll look for retracement back to this level or here before going long. Again, a bullish price action setup would trigger a long setup for me. And lastly, folks, I'll be looking at the British pound against the Swiss franc. So looking at the weekly chart, what do we see here? We actually see a bearish engulfing pattern actually, if you do classify this last candle as a bearish engulfing pattern, right? So zooming out, we can see how this level actually played a significant role, the 146.70, and the recent move showed that price closed below that level. So with that, I have a bearish bias in mind, and looking at the forward charts, this is definitely a level which I'll pay attention to before going short, the 146.70 level. So I'm hoping price will actually come back here, retest, form perhaps a pin bar before going short down. Alright, so yep, so for those of you who are thinking when to enter and where to exit, I'll explain my exits here right now, because exit is actually very discretionary, thus I don't really go into much detail on how I want to exit, because different traders have different approach to taking their exits. So there's not really a lot that I wish to comment on, because there's no right or wrong. But if I were to exit, one way I'll do it is again using the FIB extension. I'll draw from this swing to this swing, right? And I'll look to target at the 127 or the 162, right? So possibly a 127 will be more conservative and 162 will be more aggressive. So if you were to use a multi-lots, you may exit the first lot at 127 and the remaining at 162. Or if you are really very aggressive, you can exit all at 162. Or if you are more, how to say, logical, you may want to set the break even as price approach a key level like the 127. So there's really 101 ways to go about managing the trade. So there's really a lot I can say, but that's all I would say for now. Just pay attention to the 127 and the 162 level, because traders do look at these two levels. So those two levels are definitely viable targets. Alright, so with that concludes my weekly analysis. I hope you guys enjoyed it, and remember, you'll never trade alone when you're trading with Rainer. Thank you.